Bienvenidos. What's going on, everybody? Good to see you this morning. Ron, you know I need the coffee. Um, Man, it is the 9th of July already. Time flies when you're having fun, guys. Welcome to the room. Room's been a lot of fun lately. Been a lot of great questions, a lot of participation. Can't stress how important that is to this environment here. There should be no questions ever that you don't get an answer to. I can't stress that enough. I know I've got some new faces in here, or at least some new avatars, right? Caleb, welcome to the room. Jerry, it's great to have you. Looking for some other names. I know we've probably got some other new people. Guys, this class is a discussion. It is always a discussion and not a lecture. Feel free to jump in, to have a blast, to ask a million questions. You cannot disrupt the flow because, well, honestly, I have no flow. And if I know you need something, we're going to address it. We're going to take care of it. Miss Linda, I opened up a NASDAQ workspace for you today, just so that we could go back and look at it and see, make sure that we're there. Want to bet? Bring it, Ron. Bring it. Guys, the first thing we do each and every morning as a class is we talk about news. Today's FOMC meeting minutes, guys, 2 p.m. If you've ever watched the FOM meeting minutes, that's hard to say, be released. The markets, especially S&P, NASDAQ, guys, they go bonkers. There's huge spikes and jumps and bumps, all the things that could really mess up a good trading day. There's two types of people in the world. The people that remember and sit out of the market and have absolutely no ill effects, and the people like I've done that try to trade during it and blow out accounts in about 18 seconds. So knowing that it's there keeps you out of the insanity, and we do that every morning. We look for high impact news because it can affect the flow of the market. And really all we're doing, guys, is we're trading patterns, and news can disrupt patterns. So we're going to talk about the patterns today. Victor, you have someone having issues with Discord. Is there a number she can call for Nexgen support to get help? She is brand new first class. Well, Victor, Nexgen is not Discord, unfortunately. If you can give me a little insight to what her problem is, maybe I can give a little help. Is she having trouble posting? Is that what it is? Or can she not get in? Did she get an invitation to the room? Because I want her in here. So we're going to figure this out. It says email is already, well, then she's probably already created a Discord. At some point in her life, she said, man, I'm going to join that, and maybe forgot. So she has two choices from that. She can either use a different email, create a new Gmail account maybe for Discord, or she could go through the whole rigmarole of trying to find out resetting passwords. When you register for Discord, they give you codes. It's kind of a colossal pain in the butt. I would almost say go ahead and try to re-up. Just if she has a second email, try to register with that one, because I did the same thing. I used my Nexgen email, and then I screwed something up, and it was easier for me to use a Gmail email than to try to fix what I screwed up with the Nexgen email. So maybe a little helpful, maybe not as helpful as you needed it to be. Once she's in the room, though, I got her. You let me know. I'm trying. Guys, everything that I talk about really throughout the day is either on the NextGen-T3.com site or the Nexgen Pro Trader Funding site. This room is designed, we do a lot of live chart reads. This is an educational room. This is not a trade calling room. I will not tell you when to enter the market. I won't tell you when to exit. I won't tell you how to manage. But what I will do is I will help you with your chart reads. I will help you learn to read these indicators, to recognize advantages, so that you can make good decisions in your trading. And I talk about three specific advantages. We talk about momentum just repeatedly. Strong trigger lines, guys. And I'll go through, I know I have some new people, so we'll talk a little bit about indicators as well. Um, when we talk about momentum, if you're watching on NinjaTrader, these are what we call trigger lines. These are small triggers, two solid lines form the small triggers. These are large triggers, two dashed lines form the large triggers. These are fast, these are slow. These work together to define momentum in the market, guys. And when there is a separation, when there is a gap between the small and large and everything is going the same direction, we call these strong triggers. When you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Small's below the large, everything's screaming down. It's that space created that lets me know that the odds are favorable for the market to continue down. So whether you are on NinjaTrader or whether you're looking at TradingView, strong triggers is always defined by that separation. Your Renko charts on NinjaTrader show change a lot faster than the 15-minute bar will on a large chart. So this is your first advantage for all of my NinjaTrader users. For my TradingView users, I want you to recognize where price is in relation to those strong triggers, guys. If price is left of these fast triggers, the market's more likely to go up. And if price is right of these fast triggers that are still going up, longs are possible, have to be managed much more aggressively. But once those triggers roll and we get to the other side, left of those fast small triggers going down, this is where your easier shorts happen. There's your transition you have to manage. And once you get to the other side of them, guys, things get a little more difficult. So there is a very clear advantage regarding momentum, and it's identified on your biggest, on your slowest chart, whether it is NinjaTrader, whether it is TV, TradingView. So momentum starts everything, guys. Momentum pushes a market. Momentum breaks key areas. Momentum will even cover some of the mistakes that we tend to make as new users. The second thing that we're going to look for on every chart posted in this room, and we're going to talk about it all day long, is whether or not we have a clear path. So again, both platforms are going to have areas. Both platforms are going to utilize, for lack of a better term, horizontal lines on a large chart. So the names are exactly the same between the platforms for 99% of them, guys. You're going to see divergence high lines, which is a magenta line that prints off a pivot. Every time you see a magenta line off of a pivot, or every time you see a cyan line, a divergence low, print off of a pivot, I just want you to say to yourself, hey, the market is losing momentum. Divergence is a loss of momentum. You can see it visually. The software uses MACDs. It does all the calculations for you behind the scene. You just don't even have to do the math anymore. Miss Linda, I know that you have MACDs on your chart still. Nexgen's automated the process of the comparison. You are going to see yellow 1-to-1s and pink 1-to-1s on the S&P, on crude oil. Good morning, Carl. We're looking for yellow 1-to-1s. These are just key areas. These are 100% Fibonacci alternates. You'll see them on both charts, both platforms, guys. They can be support, they can be resistance, and you'll know about them before the market ever gets there. You're going to see the mid-band. When price is below it, it's magenta. It can behave as resistance. When price is above it, it can behave as support. It turns green. And then the difference that you're going to see between TradingView and between TradingView and NinjaTrader is NinjaTrader has Fibonacci. Fibonacci has been the root of everything that we've done for the last 30 years. Red Fibonacci resistance can stop a market cold. It's a place where reversals can happen. Blue Fibonacci support has the same effect. Because Fibonacci hasn't been able to be written into TradingView yet, I'm going to say yet, on TradingView you'll see zones. So if price reaches zones, you have to be aware. It could reverse the market. Price reaches a zone down here, red and blue areas. These are just supply and demand. These are going to help you identify potential turning points in the market. In order to understand whether or not these areas are likely to hold or likely to break, we're going to count triggers when the market gets there. And that's really all it is, guys. If price reaches an area, if the market pushes to, for example, Fibonacci support, if no triggers get below that area of support, guys, we're going to assume that area is going to hold. That area is going to create an untradeable bounce. That area is going to stop forward progress and potentially reverse the market. We're doing that because more often than not, if no triggers get through the area, you're going to find that the market stops. The advantage is coming from having all four, small and large, breaking through an area. This gives you what we call a clear path. And when you have a clear path, there's nothing in the way in the large chart to create a bounce. What you will find is that these areas do break, typically with momentum. So we're going to count triggers. First price reaches, all the triggers are below. This is where you can sit on your hands and do nothing. If two triggers get through, it has the potential to break, but it's less likely. Once three of the four triggers make their way through, the breakout is more likely, but it's not a clear path until all four triggers get through. So every time the market reaches one of these key areas, I want you to get in the habit of just counting triggers. And what we're going to do is we're going to relate this back all day long, and we're going to say that the recipe for a trade is first having momentum, coupling it with nothing in the way, and then you're going to find an entry area. The first entry that we talk about as a group is what we call a high probability trend trade, and that's what these rules are. These rules are designed to help you identify a pattern that we call the highest probability trend trade. It means that each indicator on every chart agrees with the rules for the trade. So there is an entry that is associated with this look. When your large chart, your 13.2, has strong triggers, when at least three of the four triggers are through, there's a recipe for entry that says you can buy a pullback, a little fight on a smaller chart, right at an area, a Fibonacci line, a mid-band, yellow 1-to-1s, and they need to be inside of these large and synthetic triggers. So when your large chart looks like this, your entry is going to be a little bit lower, a little bit less risk, a lot more accuracy, and give you more room to your targets. And we're going to talk about these all day long, but that pullback pattern is consistent. The market pulls back, and it typically bounces off of areas inside of triggers. And the market pulls back, and it typically bounces off of areas inside of triggers. And if you remember that language, pull back to an area inside of triggers, what it does for you is it puts you in a position where you're going to begin to call your shots before that retracement ever happens. We use that retracement because there's really two forces at work in the market, guys. Your large chart and your small chart. Your large chart, whether it is a 13.2, whether it's a 15-minute, is going to define the overall opinion of the market. It's going to help you identify momentum. It's going to help you recognize areas. And it's also going to help you just even understand the trend through the background color. The large crowd, the people in control, the men and women that make trends, they react at those key areas. They're the people that enter and exit at Fibonacci, that reverse, that take profit. So we're going to respect the large chart. The large crowd, typically wins. Your small chart, whether it be 1 minute or 5-1, is like a small crowd, and you're going to see the immediate in the market. And these guys create fights on the Renko that takes you down to the perfect entry. The 1 minute chart is a much slower version of the large chart. And when the large chart says up and the large chart screaming that direction, we can wait for agreement on this 1 minute chart to help us go in the direction. And we trade to these key zones rather than directly into these key zones. So we're going to break it down, and we're going to talk about charts all day long, and we're going to look at the advantages in every chart that's presented in this room. We're going to talk about momentum, path, and entry, and when you can define all three, you have a high probability trade. If one of those advantages is missing, guys, we're going to call it a medium probability trade. If 2 out of 3 are missing, we're going to call it a low probability trade. I just don't even like the way that sounds. Want nothing to do with it. I want you to remember, especially new people, you're not in control of anything in the market except whether or not you enter. You're in control of having your rules met. You're in control of whether or not you pull the trigger. Knowing what's working for you and against you is what we do with chart reading, guys. Your chart reading tells you if you're chock full of advantages or if they've gone out the window. So you make entry decisions based on your chart reading. You make management decisions based on what's working for you and what's working against you. Victor, does this need attention right now? All right, so we're going to do this. Watch this. Victor, you're going to hate this, but all the love coming at you. Took this ride 3 times. You sure did. Victor took 3 trades. That's awesome. But Victor, why? And guys, this is what I ask of you when you post in my room. This is my on bended knee plea with you. When you post in my room, don't tell me you took a trade. I can see that you took a trade. I can see that you entered the market. Hell, I can even see where you exited. I want you to tell me what you saw. I want you to describe the momentum. I want you to talk about whether or not you had a clear path. And I want you to tell me where and why you entered. And guys, this is not for me. I can look at your charts and understand everything that just happened. What you're doing is you're writing a recipe for success, guys. Repetition creates recognition. Being able to do the same thing every time because it produces an edge. I can go to a market, I can enter and exit 1,000 times. If I don't know why I did it, how do I repeat the good stuff? How do I avoid the bad stuff? Does that make sense, Victor? You are literally setting yourself up for long-term success by identifying what's going on in the market. So if we took Victor's chart here, Victor and I had this planned out. Your first trade, Victor, you had strong triggers, right? You had 2 of 4 triggers through resistance or support, excuse me. So we're going to call this the potential to break. And you entered on a pullback to an area inside of triggers. It didn't take long to annotate it. But Victor, how did it work out for you? Pretty awesome, right? Great looking trade. Awesome advantages. So Victor, when you come back tomorrow and you study these pictures, and I'm sure you're going to study what you did today tomorrow, you're going to say, man, when I have strong triggers, when the potential to break is there, I'm going to look for an entry inside. You're not going to say, I took this trade. Why the hell did I take the trade? What was going on? Now I don't remember. I slept since then. I drank since then. I don't know what's going on. So guys, your annotations are going to create a roadmap for being consistent, for doing the same thing every day. And that's why we're going to go through and we're going to talk about it each and every day. But first, let's go look at some live charts and see what the market's doing for us, and just identify some things. So here's that NASDAQ chart. Smalls are above the large, space between. Can you give me a Y in the room? And I'm talking to all of my newer people. Let's freeze it because the NASDAQ moves fast. So Naeem and Jerry and Christy and Ollie and Frank and George and Caleb and Jerry, can you give me a Y? If you see that separation, this is your strong trigger look, guys. This is a look that pushes the market in the direction of the trend. But then we've gotten to Fibonacci resistance, and I start counting triggers. I have no triggers through the area, which means I have to sit on my hands. This is what we call a termination condition. A termination condition can create a bounce, can create a reversal. You see it right here where price reached a divergence high. None of the triggers broke, and there's your retracement. You see it here where price reached Fibonacci support. None of the triggers broke through, and it went up. Ladies and gentlemen, you will know about these key areas before you ever reach them, and they will help you call turning points in the market, and they'll keep you out of trouble, and they'll keep you from wasting equity as you go through. The easiest trades, ladies and gentlemen, that you will ever take will be trading away from areas to areas with momentum. Guys, this is the golden goose. And that's exactly what it is, Victor. The notes are like reviewing your homework for a test. I like that analogy. Um, so, guys, there is a path to getting to where you want to be with Nexgen with these indicators. I'm going to share it with you in just a second. But first, guys, crude oil is trending strong. 30 plus bars, no reversal bars. I don't have separation. I have 3 triggers through. I don't have any areas inside of triggers. When the market is screaming in the direction like this, guys, when we label it a strong trending market, selling the mid-band until it stops working. And then on the S&P, 4 triggers above resistance, it behaves as support. We've continued up to Fibonacci resistance and the triggers haven't broken, and we're pausing. You new users are going to realize that I say, man, I can't find rules met an awful lot. 95% of your day, ladies and gentlemen, is spent reading indicators. 95% of your day is just reading charts. 10% of your day is going to be active. So what we do in here is we learn the trigger line and the Fibonacci rules for when it's okay to trade. This is how the class is outlined. We talk about momentum. We keep going back and saying the same thing over. Where's the market? Count my triggers. Do I have momentum? What do the triggers tell us? You guys all have the ability to simulate, and I'm going to encourage you new users, get on simulator, practice. Don't be worried about being perfect. You're brand new. You're not going to be. But if every time you do something, if every time you take a trade, you drop it in the room and you say, hey, Mark, this is what I saw. This is what I did. Good, bad, and ugly, guys. We will address your chart read. We'll address your entry. And if there's a way to do it better, my promise to you is that we'll talk about it. I'll help you move on. Keep it very, very simple is what we encourage, guys. The less moving parts you have to think about, the easier it typically becomes. So, NinjaTrader users, I give you the KISS plan. This KISS plan revolves around having the highest chance of success using an entry for the high probability trend trade. It defines the entry. It even gives you some management ideas until you learn to read your indicators. And it also gives you the opportunity to trade that potential. And you'll notice that it says 3 of 4 trigger lines through the area. And it specifies no divergence because momentum makes it difficult to break areas. And Miss Linda, I saw that you posted a question. I'm going to get it in just a second. I'm on a little bit of a roll here. And then for my trading view people, guys, I'm going to give you the trading view plan. And the trading view plan, once again, it has a checklist for entry, guys. There's 3 trades on the trading view. There's only 2 on the KISS plan, keeping it simple, keeping it focused, looking for the best of the best, realizing that the futures markets trade billions daily, and it only takes $400 a day to become a 6-figure trader with a little bit of study, with a little bit of practice, and guys, really, with a little bit of participation, it's not difficult to get to that point. Post your trades in the room, everything you do, and then guys, use a spreadsheet. Track your progress. I'm going to give you 2. This is the NinjaTrader spreadsheet. This is a spreadsheet that shows you exactly what it looks like to have strong triggers, annotated pictures, exactly what it looks like when your rules are not met, exactly what it looks like to have a clear path, and what it looks like when you don't, and even some of those high probability trend trade entries. Everybody wants to see, well, does it really work? Are people really making money with it? Guys, client trades, over 500 pictures presented in this room from you guys. I steal them, use them as a study tool. Put your pictures into this next page, and then finally there's a trade tracking sheet. And this trade tracking sheet is on both. So this is the trade tracking for NinjaTrader. When we go to Trading View, I'm going to drop that one in as well. Countless pictures of what it looks like to have the rules met, ways to manage, reasons not to trade, and then trade tracking again. And I wanted to show trade tracking because this goes back to what Victor said. You should be tracking your progress, guys, and the more pictures you take, and Victor, even more importantly, with the great annotations on those pictures, you're going to go back and study them, and you're going to say, all right, what was good? What worked? What kept me calm? And you're also going to say, what didn't work? Where am I breaking rules? Where am I having struggles, guys? What felt easy? What felt forced? And if you do this little study every day, what happens is you start setting yourself up. But even more importantly, there's going to be a space for feedback, whether it is on the trading view or whether it is on NinjaTrader. And the feedback is how you're going to adjust your thinking into the day. Sometimes the feedback is perfect. This is the best trade ever. Don't miss it. Keep going. Awesome high five. And that's what you're looking for. Sometimes the feedback is, hey, you're trading in determination conditions. That's what created that bounce that caused the loser. And what happens is you start seeing the same feedback repeatedly. And guys, this is the issue that you need to work through. We'll work through it together. So every time you post in the room, guys, use your annotations as a roadmap. Use the feedback to adjust your way of thinking if it needs a little adjusting. Both of those are in the room for you. Let's look at some charts. What do you say? My goodness, I open a lot of stuff. Price has reached a zone on the NASDAQ. I'm just not looking to trade directly into it, guys. For me, this is a big red flag that says just pump the brakes on long trades. You've reached something that create a bounce. On the S&P, we're starting to see those strong triggers. We're on the good side of it, and we're getting, everything says up, and sure enough, the market's going up. Crude oil took a dive, didn't they? But look where they are currently. Right at a yellow 1-to-1. Absolutely none of the triggers have broken through. The triggers are way up here. I have a zone matching on my 1 minute chart. It's okay for me to pause for a second to wait to say, wow, this could create a bounce. Gold has strong triggers. They are into a divergence high. And guys, that area on the large chart, look at the reaction on the small chart. You knew about it. You chose not to trade into it. Even XRP is breaking a ceiling right now. That's good news for my wife. She's pretty happy about that. So that's our trading view, Reed. S&P, not enough momentum to feel great about breaking those triggers yet. NASDAQ, directly into Fibonacci resistance. Absolutely no triggers have broken through. You can see the reaction on the smaller, faster chart. Crude oil has the same 1-to-1s. And those same 1-to-1s can create a reaction. All right, Miss Linda, you have a question about TradingView. You signed up for the 1-month trial. Jason sent the indicators, but I don't know how to turn on the charts. All right, I've got a joke there, but I'm not going to say it. All right, so let's look at it. You've got your indicators, so let's get workspaces, Miss Linda. And since you skipped out on the instructions, I'm going to give you an honorary man card, because it's usually just us that don't do it. Let me make sure I'm in the right spot. Here we go. So here's the link. And Linda, let me know that you're with me in here. Awesome. So you're going to click on NASDAQ Futures 15 1 minute. I gave you the link. Scroll down a little bit. Nexgen Trading View Indicator Access. Click on the chart. And it brings up the chart. This is a view only mode. So Linda, what we need to do is we need to copy it so that you can put it onto your trading view. Are you using the desktop version, or are you still in browser? Either one works. No worries. Does it look like a website like this? Or does it look like, see how that doesn't have my website or anything? This is the desktop version. Okay, cool. So the first thing you're going to do is you're going to click copy. When you click copy, it's going to copy the chart layout. So I'm going to save it. And now it will open in my browser version. So now I've got the workspace here in my browser version. If you are using the desktop version, you can come over here. And this was just a little training one. So this is just gold with triggers on it. I can go to my layouts over here and I can click on that same one that I just saved and watch that. It'll turn it into the workspace. And then when you close, it'll automatically save. And that was actually the micro NASDAQ. So first, you're at the website. Go to instructions. We're going to come down to, get the access. Scroll down, scroll down. There's your trading plan. And there's your workspaces. So no matter which one you want to use, you can click on it and you'll be good to go. If you need help, let me know. We can go through it again for sure if you need to. What I find is with TradingView, it gets easy quick. And yesterday, Miss Linda, I did make a video about scaling, about entries, exits, all that good stuff. Or we can do it again. Remind me at the end of class, and we'll go through it one more time if you like. Guys, they are pushing up. Remember, FOMC day today. FOMC day today. Awesome. Did you send him your username, Gary? Guys, make sure you read the instructions. You have to send him your username, and then he'll give you access. I had somebody waiting like 3 days. They're like, how come Jason hasn't given me my indicators? Well, you forgot to tell him that you had TradingView. And guys, this market is doing some FOMC shenanigans for sure. There's a lot going on. So let's look at the charts that you guys have posted. Pete got us going. Guys, remember, everything that I look at, I'm going to talk about momentum, path, and entry. I'm going to talk about those three concepts. I'm not going to grade your trade. Sometimes I might say really nice trade. That doesn't mean that if I don't say it, it's a bad trade. And guys, remember, the goal of feedback is to make you a better chart reader, not to tell you when to enter and exit. So Pete gets us going, and Pete says, this is a strong trending market. Gary, did you send him? He'll probably be on it. It takes him just a second. I don't know how many tickets he has. Strong trending market. And Pete takes the first one at 35 on the pullback, which means Pete has 4 triggers above. Strong trending market. Buy the mid-band until it stops working. Oh, Pete, you went short. That says you went short there. And then got stopped out. Is that right? I see the entry on the left side. This looks like a short trade that got stopped out. Maybe you reversed your position somehow. It printed wrong? Okay. And then strong trending market, buy the mid-band till it stops working. Pete, you love to trade directly into areas. Guys, one of the great things about Fibonacci is that if you enter 2 ticks below Fibonacci, that Fibonacci can create a bounce. Now, if you enter 2 ticks above Fibonacci with the large chart going up, you've got room to the next target. Trading directly into fibs, guys, is rarely advantageous. Giving yourself room to manage, guys. Giving yourself room to take profits. It's going to pay dividends. No reason to jump in, right? Why would you? You don't have momentum. Your triggers are flat. You're 2 ticks below resistance. And guys, this is Pete's plan. Pete can do whatever Pete wants. But I'm obligated as the educator in this room to point out you're hurting yourself with this one because look at it. Fib held. Did it again, right? It's okay to let the market break above. It's okay to give yourself room to targets. There's too much movement in the market to not. Guys, there's that termination. It reverses the market. It creates that momentum. And then, Pete, you trade directly into the fib again. There's your momentum style entry. But with the potential to break and all the momentum, Pete lets everything roll, takes a shot, easy run to the next fib. I'm just pointing out, my job is to go back to the 3 every time. Momentum is amazing. Path is not quite clear over here, but it has the potential to break. I feel like a little bit of patience because the fib held and bounced beautifully right there. I never presume that it's not going to do the same thing. Good stuff. And then this one, you're entering a little bit before 3, directly into the zone, but with all the momentum. Small's above the large, you have the advantage of momentum. Directly into the area, sure enough, it pushes back. And then when it breaks the area with momentum, you'll notice that it never gets back below. So much less stress. You get paid at the next zone, and then you let the runner go. Nice one, Pete. Guys, this is such a great example of how powerful these zones can be, and a great example of why I don't trade into them. It hit it and bounced, it hit it and bounced, it hit it and bounced. You don't have to trade directly into it, guys. There's going to be easy trades from the other side. Great trading, Pete. Nicely done. All right, and now a couple trading view examples. I like that you guys post both sides. New users, you're going to see both sides of the coin. You're going to see both platforms. Ooh, this is big. And we're going to see how this works out. All right, so the large chart, guys, has strong triggers, but we're on the weak side of the triggers. So one of the things you can do, everything still says up, but since we're on the weak side, it becomes real important to let the small chart agree. Ultimately, this did go up 3 candles later. When not to believe in the signal, background is green, but good, that is good, but, well, signals for when the rules are met. And guys, the rules say if you're going to try the trend trade, it's a close on the correct side of the triggers. Andy, you had a perfect trend trade look in a market that's going up directly from a zone at the 1 minute mid band and a close above. And this is about a 5 or 6 tick risk on the close. It does fail. Guys, trades will fail. It's amazing. I love the different approaches people have. I can't give every bar as much credit as you give it. I can't look at every bar, guys. This is overwhelming. So when I'm looking at a market and I'm trying to figure out whether or not I'm going to take a trade, one of the easiest things, this is my opinion, and my opinion is what you paid for it, absolutely nothing. 15 minutes, not trading directly into zones. 1 minute, not directly into zones. Buy or sell a close on the correct side of the triggers at the midband. Not directly into zones. You're trading from above it. Not directly into zones. Buy a close on the correct side of the midband. Takes a lot of the stress out. I've got 3 things to look for instead of 173 candles. And I like this one because this one you start using language that I don't even understand. But I'm going to give it my read. 2 hanging doji. I don't know what this means. I did learn engulfing. Momentum pinched and rolling. So I'm going to give you my read, Andy, because I don't understand everything that you're saying, but we're seeing it again right here. We're on the left side of the small triggers, which means you're on the strong side of small triggers pointing up. Does that make sense? Strong side, triggers are up. It says, hey, let's look for longs. Pull back to the mid band, close on the correct side. That's your trend trade, brother. There it is right there. This one didn't work out. This one from the left side of the triggers, that is about the easiest one you could ever take. This is the day's profits instantly. Does that make sense? Strong side of the triggers, pull back to the mid band, take a close on the correct side. I don't know about Dojis, I don't know about hanging mans. And you're absolutely right. The one-to-ones at the outer band is a beautiful target. Triggers roll past the mids, retest at the HVA, go cat go. Amen. Right? If you miss the trend trade entry, there was your second chance when it snaps back to the HVA. Great read, Andy. And I'm not telling you that anything you wrote on the chart is wrong. I'm trying to simplify it a little bit. I'm trying to put it in terms that I understand that translate to the class. Because I've never taught doji. I don't know what it is. I always thought that's where you did karate. You guys, a lot of you know more about candles and patterns than I do. And an overall, I keep mine very, very specific. How do I minimize? How do I make it easy? I'm an artsy-fartsy kind of guy. Very right-brained. All right, this took forever to set up. Let's see what it was. And let's figure out where your entry was. Entry came just below. So guys, one of the things that you're going to realize is that just because you get a tick or two below a zone, it's not always the easiest, but let's look at the advantages. Strong side of the smalls. Larger down, smaller down, strong side of the smalls. Pete decides to take a trade, and it just goes sideways for 25 minutes. It turns into a trend trade up here, but it never gets above that zone. It continues with the direction of the large chart. That's a tough hold. Great hold. That's 25 minutes of hair loss, especially when your large turn up, when your smalls are above and they're pushing up. And this is one of those things where the short, maybe it doesn't work. That's okay. We get to the wrong side. And then you don't have the momentum you need for momentum trades all through here, but it does turn into a beautiful trend trade. Way more grays, yeah. Does that make sense? Not a lot of room to manage directly into the outer band. Patience is the hardest thing with trading. Waiting for it to be perfect, guys, because let's face it, our money is worth perfect. The goal of trading, whoa, oh my gosh, Miss Linda. The goal of trading is to get paid. I like to get paid the easiest way. Had confluence 100%, 138. Didn't want to risk the small profit. Next time, move profit stop close below new fib. Stay in trade until I reach an area or get stopped out. Miss Linda, so you're doing manual Fibonacci? Did you know that those red and blue lines on your chart are taken from tens of thousands of Fibonacci retracements, going back historically, creating synthetic time frames, running an algorithm, rating them, sorting them, and giving you amazing areas of support and resistance? This is great. So how did your Fibonacci calculations translate into taking this trade directly into resistance with all the triggers below? That would be my question. I'm not telling you you're wrong, but I'm telling you, John Novak revolutionized Fibonacci trading by automating it, by having so many areas. And you had confluence of 100% and 138 on the 34.5. You had it 10,000 times over here. You had strong triggers, and you traded directly into an area that could stop the market. I'm not telling you it's the wrong trade. It was the right trade for you. No momentum, and it retraces, right to support, and it bounces, resistance, it bounces, support, it bounces, support bounces, 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 bounces. So I love what you're doing, right? I don't understand it. Does it create an advantage? There's so many opportunities. Everything says up. It's strong. Just a little patience. Get to the other side of trouble and then hold that thing. Does that make sense? You know where trouble is. Is there any reason you can't wait 5 more bars, get above it, just in case it creates a bounce? Get to the happy side and then ride that thing. Something to think about. Something to think about. I love that you're manually doing it. Overachiever. So these MACDs, Miss Linda, this is from 20 years ago. This magenta line and this cyan line, this is the calculations that's now automated that use these MACDs behind. And all of these are automated. I sense some trust issues. Can you guys hear me? Give me a Y if you could hear me, please. Gary's struggling to hear. All right, he'll know. Thank you very much. If you guys can never not hear me, just let me know. And Gary will know to reboot. Great. I love the trade. Good job making money, Miss Linda. And I'll always celebrate. If I'm going to trade into areas, I'm always going to be glad that you got away with it. I'm always going to be glad that you got away with it. But I'm obligated to remind you, oh, this is the part people don't like. I made money and Mark's beating me up. I'm not beating you up, ladies and gentlemen. What I'm telling you is that the software is so stinking good. These are the chances that you took, Miss Linda. 36 times not having triggers through an area created a loss. 36 times. It only broke 10 times. There is a huge advantage to waiting until you get to the other side of things. There really is. Something to think about. Use it as you wish. I don't tell you guys how to trade. But I sure do want you around for the long haul. And guys, as a general rule of thumb, trading directly into Fibonacci areas is not a recipe for long-term success. All right, Russ. 7/8/25 sim NASDAQ PM 3 by 12 by 20. I don't know what that means, but I like it. 3 lot, 12 stop, 20 target. I do know what that means. That's your ATM strategy. All right, so momentum on both charts. You enter on the snapback to the fib and ride the momentum down. Did I read that right? Entry full bar pull back to the fib. You let it get below and pull back, Russ. This is the perfect next-gen momentum trade. With the potential to break, snap back to the fib, and not to beat a dead horse. When you're on the good side of the fib, it makes it so much easier. When you're on the wrong side of the fib, these retracements are more likely to happen. Great trade, Russ. Great momentum trade. And then you do it again. Momentum both charts, get above the fib, buy the snapback, easy money. 5 ticks, is that what you're looking for? Am I reading that right? It's a little behind. In at 24, out at 26 and change, 27, 26. All right. But you said you were going for 20 up here. You're risking 12 to make 4. And I can't see whether you're on a simulated account or not. So let's do a little management lesson if we can. My expectation, that's not big enough. You'll capture full picks for class. This is a full pick. This tells me everything I need to know. With this momentum and triggers breaking, my expectation is that the market is going to be hard to stop. Momentum is my advantage, 100%. When I take a momentum trade, I can let it lose momentum. That's a close on the wrong side of the triggers or hit a line. Until then, no reason to exit. So every advantage that got you into this trade, Russ, stuck with you. all the way up to the key Fibonacci area where it stopped. I like this, and I love that you got paid, but nothing changed on either chart all the way up to trouble. Does that make sense? I mean, absolutely nothing changed all the way up to trouble. Absolutely nothing changed all the way down to trouble. You're trading with a few rules. Are you not writing your rules on the chart? Are you keeping half of them secret from me? It's easier for me to give feedback if you guys let me know what you're doing. Double secret probation rules, right on. Well, I'll tell you what, until I know your plan, Russ, I'm going to talk about how you could have held these longer. But you do what makes you happy. Because every chart posted in the room gets to be a lesson for everybody, not just you. We use your charts to do it. But I want to show you guys what I'm talking about. So Russ, you don't have to take this lesson if you don't want to. As long as I'm left of these small triggers on my small chart, guys, it's going down. It's not going to stop. As long as I'm left of these triggers, it's going down. It's not going to stop. As long as I'm right of these triggers, it's going up. It's not going to stop. So if you're in a just jump the fudge in trade, I'm going to jump in because of momentum, or I'm going to take a momentum style trade, guys, you can hold until you get a close on the wrong side of the triggers, if you choose to. So I'm left of the small triggers. I don't even have Chart Trader up. I'm left of the small triggers. That's strong trending up. We're not going to play that game. Right of the small triggers until it goes up. I want to see if I could get a clear path, and I can't seem to get a clear path. But there it is, closes above. That's your loss of momentum. No sound. Can anybody hear me? Or is it just you guys? 1 second. Pablo's got me. That's so weird. Maybe because we're in the same city. I wonder if that has something to do with it. I'll be back, guys. Don't fear. Reconnecting, coming back. Hopefully you guys can hear me now. Do we have some audio? Pablo still got me. Guys, sound check. Can you hear me? Give me a Y if you can, please. Anybody else? All right, nobody else can hear me. Sorry about this, YouTubers. All right, guys. I'm going to get my screen up. Do we have volume? Can you guys hear me? Yes? Okay, awesome. I apologize. It happens sometimes. It does happen sometimes. It does happen sometimes. So we'll fix it. And we'll work. I'm waiting for people to get back in. I'll address Linda's comment when she comes back in. Let me see where we're at in pictures. We just did Russ. We saw Linda's. Victor, we looked at yours. Good stuff. Let's see what Miss Jen's doing. All right, Jen. Termination triggers roll. Oh, thank you, Paul. I may have. I'll scroll back up and find yours and make sure I didn't either. Jen, 2 triggers through, 2 triggers not. There's your pullback to the area inside of triggers. You enter below the fib. At this point, your momentum is straight up, Jen. The fib is really inconsequent. It doesn't matter because it's this fib right here. You're hoping it breaks. The same way you're hoping that this fib breaks down here. There is no safety with odds favorable momentum up, jumping in below the fib. At least, I mean, it's one less thing to create a bounce. And then this one does create a little bounce, and you get back in. Instead of buying, you sold another 2, error, reverse that immediately, and then you're out of trouble. It's a great looking trade. The 50-50 entry was a lot less risk up here. A lot less risk up here than it is all the way down here, but nicely done, Jen. All right, Miss Linda, you did say that you jumped in because of odds favorable momentum, right? And I got to tell you, I agree with that. Like, I love momentum. I really do. This is NASDAQ. And this is where I like to do this. And I'm just going to scroll back to a market that isn't just absolutely railing one direction. This had amazing momentum directly into the fib. And this had good momentum directly into the fib. And this was outstanding momentum directly into the fib. All of the momentum directly into a divergence high. Great momentum directly into a fib. Odds favorable right into a fib. And the point that I'm trying to make here is momentum is outstanding, guys. Momentum really does push a market. Momentum creates an awesome advantage. But we also know ahead of time exactly the areas that can create problems, that can create fights, that can create bigger retracements. So while momentum is what we look for to break areas, let's see if crude oil did it. And guys, this is a good lesson. This tail is a fluctuation in price. So every time you see a tail, you have to know that there was some sort of retracement. Now look at where that tail came from. Right at a fib. And the reversal comes right from the divergence high. Tail at the fib, tail at the fib, tail at the fib, tail from that fib. All sorts of indecision again at the fib. And then once they clear it, it's great. And then if you look, there's more indecision right at a key Fibonacci area. So when I talk about at least let your small chart get past it, guys, get away from that decision-making point. And it's smoother sailing. Does that make sense, Linda? Momentum is awesome. And even if you don't want to wait for it to break on the large chart, let it get below trouble over here. And it makes it so much easier once you let it get it below trouble. Just something to think about. That's all I'm doing. Paul, I'm going to scroll up and see what I missed. And I think you're right. I missed a little snippet there. I saw this one this morning. Odds favorable. Everything screaming down. Coming from a strong top. And Paul, you take the perfect, I didn't get it here. Let me get it here look. And it is the strong triggers, snaps back to the small, and finishes the move. It is such a good looking trade, Paul. Nicely done. You didn't like this one for whatever reason, and then you let the triggers agree again and found your way to get in and write it down. Trigger line's telling the story for you there. Nicely done. Andy. You're above the smalls, the large are up, everything says up. You tried the short, didn't work, and then you got your head on with momentum and just kept making money all the way up. Nicely done, Andy. If this chart is flat or not strong, let your 1 minute lead the way. Great job. Pete, there's that momentum style again. Not below the fib. Half of the bar was below the fib. It never quite cleared. There's the retracement, but with this look, it worked out. Nicely done. Miss Linda. Okay, we saw that one. That was the group that I missed there. Paul, thank you for pointing that out for me. I miss these things sometimes. That's okay. You kept your head in the game, Paul. A little indecision, but you just got right back into it. Very nice. All right, now I have to figure out where I am here. All right, Miss Jen, we saw that one. Miss Linda. On the 13.2, I thought it was going to turn down. Not sharing 13.2 because it's too large. Reason one stayed in so long is because I was listening to you teach TV charts. Thanks so much. So here's a cool one, Miss Linda. Until you got a close on the wrong side of those triggers, it never even hinted going down, did it? That's a pretty awesome way to hold. Nice hold. That's such a good lesson. Me personally, I like getting paid here. And then where you exited, I'm probably looking to get back in with that large chart. I'd love to know why you thought it was going to turn, though. You went short. Okay. I like this. I love this. Miss Linda, I hope this doesn't aggravate you. The last trade we talked about, I jumped into the market, into a fib, because of strong triggers, right? Now, hold on. Let's look at this one. I went short despite strong triggers because I thought it would turn. So Miss Linda, what this tells me, because this is the exact same look as your entry from the other chart, is that maybe we don't have a rule in place for entry. Maybe, possibly, you're letting your gut lead the way. Because this look, hold on, it sure does resemble, and Miss Linda, just so you know, this annoys the hell out of my wife that I don't forget things. Sure looks familiar, doesn't it? So Linda, this is where I would ask you, what's your entry rule? Is it a gut feeling? Or do you have something that says, hey, here's your entry, take it? Because on one of these, you broke your rule. And again, guys, I don't do this to say, hey, you're doing it wrong. But if I notice the inconsistency, everything is up and you go up with it. Everything is up and you made the decision to go down. Guys, trading our opinions rarely works. I'm glad that you got your head right, though. You're like, whoa, that was wrong. I need to be going long. That happens sometimes, right? We step out. But if you have a checklist, if you have a reason to enter the market, you can avoid those little blips on the radar sometimes. And then just great hold. Awesome hold. I do this in my own trading, Linda. I always go back and self-analyze. I always go back and I look at my charts and I say to myself, am I doing what I'm supposed to do? Am I taking the trades I'm supposed to take? Am I following my plan? And when there's no stress of the trade, and guys, this is why I'm so calm, cool, and collected looking at your charts. When there's no stress of the trade, what you can do is you can go back and take an objective view at it. And you can say, oh, I may have traded into this area, or I may have fought momentum, And if nothing else, you scribble a little note down that says, okay, this wasn't my trade, this wasn't my advantage, this wasn't what I was looking for. Steve, everything says down. You go short directly into the one-to-ones. And you get paid. Chose to trade into it, but the large chart's clear. And that's a big factor here. The large chart is down. Every indicator is down. And Steve, you said with strong triggers, I'll take the shot. Nicely done. Nicely done. I don't think there's anything wrong with you guys trading any way you want to trade. I just want you to know what you're up against so you know how to manage it. Strong trending market, get above it, trade from it. Look at you. Russ, you just quadrupled your profits for the day. Nice trade, man. Just rocking that momentum trade. I love it. This is why we post in the room, guys. Sometimes a little bit of feedback changes the whole dynamic. Nicely done, Russ. Was it easy? Was it easy to hold while it was screaming? Or were you going, oh, I'm going to get sick. I need to take my 4 ticks. I spent about 6 months saying, oh, I'm going to get sick. I need to take my 4 ticks. Very relaxed. I love it. Great job, dude. Great job. So if you guys are new with me in here, if you are just learning the software, whether it's TradingView, whether it's NinjaTrader, guys, I'm telling you right now, participation in the class, it produces results. Participation in the class gets you the feedback that you need to feel comfortable about what you're doing. Feedback from the class takes you from taking $60 winners and turning them into $250 winners. Because I'm going to see the things that you don't. That's my job. We'll talk about it. We'll discuss it, and we'll find a way to do it better. Miss Jen waited for price to clear, just jumped in, and they got you. But you jump back in and get paid. Nicely done. Large charts in a strong trending market with absolutely nothing in the way. Jen says this market's more likely to go up than down. I'll just keep grabbing them. Nice job, Miss Jen. But Paul, we saw that one. And Pete. Strong trending market, broke the termination. You had room to trouble, or maybe you didn't. So you got in at 78. You got in just below. Okay. So you're taking the I hope it keeps going, just below the one-to-ones. Actually, 78 is directly into the one-to-ones. And a divergence creates a bounce and you hold. And another pivot stop out and you hold. Thank goodness you got out. Strong trending market is over. Things roll and you go the other direction. This termination is awesome. This momentum is insane. This strong trending market is great. Strong trending market directly into something is less likely to work, guys. And it goes right back to look at the reaction, look at the reaction, look at the reaction, right? But Pete, the idea in a strong trending market isn't jump in one tick above one-to-ones and hope it works out. These are your easy. Get below, trade 2, get below, trade 2, get below, trade 2. And eventually it does stop working. 1 divergence, 2 divergence, 3 divergence, right? Getting into at the tail end, and for in my own personal trading, I can't project this on anybody. Didn't make any money, didn't make any money, didn't make any money. Well, now I'm going to try to make money. And it was exhausted. It was exhausted. But this is why the common is when it's clear, sell the midband until it stops working, right? And that would have been the last time that the midband worked. So instead of jumping in well below it, sell the midband. And then when it doesn't work, you go the other way. Does that make sense? Or if you are just going to jump in, make sure there's nothing in the way in that strong trending market. It's tough to trade at the tail end of a run, but and we'll use Jen's picture again. Strong trending markets is typically buy the midband until it doesn't work, or until you hit an area. So strong trending or not, that's a stop sign. That's a stop sign. You can see the tail. That's a stop sign, stop sign, stop sign, stop sign. Once she's above it and hasn't hit the next stop sign, that's the one right there. It's those wide open spaces in a strong trending market that typically pays results. But if the idea is buy the midband until it doesn't work, in Jen, that could have gone to a midband in a strong trending market. That could have gone to a midband in the strong trending market. That could have gone to the midband in the strong trending market. How much are you willing to give back? Where does your stop have to be, right? It's harder to take these jump-in trades in a strong trending market because very often there is a fight, there is a retracement, and there's no indication of where it's going to come from. Good stuff, guys. Good stuff. Gary. Gary, are you in here? I want to make sure you're in here. You fixed it? Okay, awesome. Gary, the one thing that I love, the browser version is cool. The desktop app really frees up a lot of space, I think, because you don't have to deal with all the internet nonsense. The desktop app, that's what I use in the room here. And then Steve taught me that if you hit Shift F, it makes it even bigger. Shift F will get rid of all the side stuff, so you can make it even bigger. Thanks, Steve Diego. You've been my tech guy lately. There's that zone. There's the reaction off the zone. Shift F. Yep. So when I click Shift F, Gary, it gets rid of all the little outside borders. It's not a ton more space, but it's helpful. Perfect entry. Did we already see that one, Russ? Am I double clicking on stuff? Or was that the trade so nice you post it twice? Strong triggers, large chart. Okay, that is the same trade. You may have had that stuck to your clipboard. That's all right. I still like the hold. So one more thing to think about this one on, since you threw it in, Russ. Is it okay to get paid at that fib and then re-enter after? You know where it's at. You're just like, man, I'm going to hold it till it's done. Pretty awesome. Taking advantage of lessons right off the bat. All right, Miss Linda. I see triggers above fib lines. When I saw it go below the fib, I took the trade. Trying to learn to take trades at fib lines correctly. Thank you for helping me with this. You're so welcome. I really wish you'd show me your large chart too, Miss Linda, because it has a lot to do with it. So this is why I opened up NASDAQ today. And I may not have the same fibs, but my trigger line should be similar. So let's see what time that trade was. 9:25 a.m. All right. So at 9:25 a.m., woo, this market has been moving, hasn't it? Well, we're going to do this. We're going to fix what ails you. You have an aggressive bone. my dear, and we're going to fix you. Are you ready? 925. This was your entry right there, probably. Does that make sense? So we're right here. And there's your little dot right there. I'm going to make life easy on you. Do you recognize that the trend is up? 100%, right? Do you recognize the strongest trigger look you could ever hope for? Every indicator on this chart is up as well. So I've got strong triggers. I've got strong triggers. Uptrend, larger up, smaller up, large synthetic, mid-band. Everything says up. It's easy to want to be first. Trust me, I've done it. So this is your small chart. And you said I waited for price to get below the fib. Well, you got one tick below Fibonacci. But Linda, this is going to keep you out of these aggressive counter trend trades. Are your triggers above or below the fib? Because as long as your triggers are above, especially if they're green, that market's probably not going down. Even here, where they roll, all your triggers are above the fib. One of the things about the 13-2 chart, Miss Linda, for the NASDAQ, is your tiny little chart on the NASDAQ, like your entry chart on the NASDAQ, is my large chart. On crude oil, it's my large chart. On the S&P. See how none of the triggers got above? And there's where your retracement happened. Let your trigger lines help you out a little bit with this read. If you have the desire to go short, you have to ask yourself, where are my triggers? And if they're above that fib's more likely to create a bounce up than it is to just automatically reverse. Let me show you another trick. If I'm thinking to myself, well, this market has been screaming up forever, and I want to go long from Fibonacci support. Miss Linda, if this market is really going to have a fighting chance of going up, your small chart will show the change. Your small chart will roll. Notice that all of your triggers are above Fibonacci support. It doesn't mean that you have a trade because they're all below resistance here. But this has to happen on a small chart before this chart can ever change direction. So during this whole run up, that was the closest to a reversal, but every trigger was above the fib. There was a bounce at 62.84, which was all the way right here with weak triggers. Reaches the fib, all of the triggers are above, and when it rolls, that's when it starts back up. Does that make sense? It's fun to be first, and when it works, you feel like an absolute rock star. But if it's really going to be a top or a bottom, your small chart's going to show you. Your small chart will show you everything that you need to see. This would have been a great long right here. All the triggers above, snap back to support, ride it up. Snap back to support, ride it up. And your large chart supported that. Your large chart had those crazy strong triggers right there. See how two triggers above that fib? That's the fib that you could have said, all right, let's go. Let's try it. I'm above everything. Great stuff, Linda. Great stuff. I'm having a great time you posting in this room. I love it when you guys that are owners that haven't participated come in and play with me. Lessons are so much fun for me to give. Long having a tough time developing. I agree 100%. But you're on the good side of things. You have momentum. The triggers roll. and you just ride it right up to resistance. And then let's go through the very basics, right? Price reaches Fibonacci resistance. All of my triggers are below. My large triggers are a full bar away. I'm not going long, guys. This trend may not be over. And it's a weak bottom, isn't it? Great short-term victory. Getting out before the fight. Nice job, Pete. Great chart read. Miss Jen. All right, what's the lesson? So the error I made was not wait for this area, got in too early right. So let's do the chart read. Did you have, Jen, let's go back to basics. Did you have momentum on the large chart? What do you think? Large are down, smalls are up. Okay. Did you have a clear path on the large chart? Price reach resistance, and the large triggers are a full bar away. So not only is it not a clear path, did you recognize the gap theory? I'm assuming that you didn't. So do you think that the error was not waiting for the area? Or is it possible, Jen, that the error was trying to trade without momentum and without a clear path? And you just got caught in the scramble. Does that make sense? Just going back to basics. This reversal bar does absolutely nothing to aid the trade when these two things are missing. And if you extend those one-to-ones over, you're so far below it, you can't call that a strong bottom. Okay, I like that. So I see which trade you're talking about. You're saying if I have a termination, the small triggers roll up, buy the pullback, right? I see which one you're looking for. You missed the most important part of it. That market turned at 67.70, right? Yeah. You either needed that fib or you needed these one-to-ones. But the second half of it, Jen, is you've already reached trouble. It's not a magical trade that breaks areas. That's okay. So close. I've done that. Man, it's so close. But you still want a clear path. And you don't want to fight gap theory and a termination. You just got excited. Does all that make sense? I love it. I love these mistakes, guys. I can't stress that enough. You have to make mistakes. If you've ever worked out beyond just Zumba class, guys, lifting to failure is one of the things that you talk about in the gym. Creating failure so that your body can adapt and grow. Trading's no different. You have to be okay to take a hickey every now and then. You've got to be all right with losses during the learning process. Jen's working on a new trade. We discussed it. Now she has an idea of correction and she can move forward. Good stuff. So this is the NASDAQ. There's my termination. There's my strong triggers, potential to break, pull back to the area inside of triggers. Down it goes to Fibonacci support. What a great place to take profits, guys. That's your pattern. Right there. Not trading into this, not trading into that, not trading without momentum. Strong triggers, potential to break. I mean, textbook. Textbook. Crude oil. Let's get to the bottom here. It's just caught, right? Not a strong bottom, not a clear path, not momentum. And look at the shenanigans in there. Now, I just went, here, let me reload. Are you good, Pete? Let me reload my camera. It's shenanigans. That's all it is. This says don't go long. This says don't go short. And this chart says, Jen, triple dog dare you. These are flattened down. These are dissecting mid bands. I can't find an advantage. I just can't find an advantage. Hands are sore. Does that make sense to everybody? Every time I look at a chart, I go through this process. I'm encouraging you guys to do it. Do I have momentum? Well, it's finally starting to roll, but these aren't wide yet. Not really. I don't have a clear path. And guys, there's no clearly defined entry area. There has to be a point in your life where you just say, it's okay to do nothing. You used to lose so much money in that chop. Everybody does. That's what rules are for. That's what checklists are for, guys. Let's go to the next market. Termination reverses the market. Can't get agreement. Large triggers are a full bar away. No triggers are through this fib. Guys, as much as you want to be in the game, sometimes the game doesn't want you there, and it tells you through your indicators. Absolutely no more longs. Jen, there's your pullback to the large triggers right there. First, it's a termination. Then it pulls back, and that fib update showed up right about the time of the entry. But that's your trade, Jen. Has to be the termination first. Good stuff. You guys are amazing. Tell you what, I'm going to take 5 minutes. Let's go back to crude oil and we'll see what it does. We'll see if they want to go up or down. One of the things John Novak used to teach, use it if you like. After a strong trending market, no longs until the large roll up. That's one of the things John Novak used to teach. When it's been a strong trending market, guys, they're telling you something. Until these roll, longs are going to be difficult. Until we get through that, it's going to be difficult. So, yeah, Linda, that kind of backtracks to yours too, doesn't it? I love how everything ties together. But we still need that clear path. And Pete, you used momentum to get up to that trouble. There's trades within the trades. The better you get at reading your indicators, the easier it is to find them. And it helps, doesn't it? And they really haven't rolled, guys. And there's a good chance that that strong trending market, they see these fibs, and that's probably what they're looking for. Notice the large triggers didn't follow. Resistance held like a champ. We'll see if they go. I'm going to take 5 minutes, guys. I'll be back. If you have a question, post it. If you have a chart, post it. Guys, if you're brand new with me, if this is day 1, day 2, I want you to understand, I know that it feels like this. It feels like a lot coming at you. The classroom is designed to help you read indicators, to recognize a couple advantages and then work from there. When I come back, we'll see what TradingView is saying. They're always very similar, but they are different. So we may get a little different idea on a couple different things. I'll be back in about 5, guys. All right, guys, let's get back to it. Who's this John Novak character posting? So price reaches a zone, triggers roll, odds favorable momentum, weak side of the triggers, sell the HVA, the one-to-ones, the zone, and just easy money, John Novak. Weak side of the triggers, room to the target, strong triggers on the small chart. We saw one like that yesterday in here too. Nice job, John. Good looking trade. I sure will, Jen. There you go. Did that work? Cool. All right. John says, I own the company. I don't have to annotate. I'm going to put words on his arrows here. Zone reached. I know, but we're going to do it on this one too because it's a start to finish. The one thing that John didn't mention that I think becomes real important, even more so, weak side of triggers. Being on the right side, not the left side of the triggers, creates even more of an advantage. Strong triggers, sell pullback to areas, enjoy. And it's just such a good looking trade. And he mentions, I love this, HVA with momentum from one-to-ones and a zone and a clear path. Everything is going right for this trade. And guys, when you see one-to-ones in a zone, this is one of the things John and I have noticed. We talk about it every time they hold, and they hold a lot. You can see that they stutter right here, and then when it breaks and comes back, just money. Great trade, John. Andy, were you a day early on news? All four triggers below the one-to-ones there is also important. I like it. Miss Linda, that's coming back to the lesson that we talked about. When all four triggers are below, this is more likely to hold than it is to break. Good stuff. Kind of coming back to the lessons. Nicely done, John. It's funny, guys, because in this room, you'll hear the same thing every day. You really will. And you'll start to see these connections where you say, okay, none of my triggers got above here, even though I was excited about thinking that this market was going to go up. Guys, there was nowhere to go at all, right? And I was thinking, oh, maybe from that termination, I'm going to go short, but there's nowhere to go. And it's the same thing. Where are the triggers? And guys, what you're watching in crude oil is it's stuck between two spots trying to get out of there. Does that make sense? It's just stuck. The difference on TV, John's 50-minute, it was still odds favorable up. Absolutely. And Jen, let me show you the lesson on that one. So I'm just going to build a 15-minute chart. Get rid of volume. And the only indicator that I'm going to put on, Jen, is the trigger lines. It takes 15 minutes to produce one bar. So this is so much slower than Renko. In 15 minutes on a Renko chart, I've got all the charts on here. So from 10:30 to 10:38, Jen, this is 8 minutes, right? You just don't see it on this one. the way you do on a Renko chart. So there's this idea. Let me find a good picture both directions for you. One of the things that you can do, and this is without the benefit of zones. If I'm left of the triggers, longs are going to be the absolute easiest. Strong triggers left. This is where you find the easy longs. This is where you find the bigger holds on the trend trades. Once the triggers are still up, but you get below them, you can start to look for shorts, especially if there's a zone, but you want to make sure that the 1 minute is 100% in agreement. And that's kind of what we had here. John gets to the weak side of the triggers, but look at the look on his 1 minute. Everything says down. So it accumulates. This still says strong triggers up, but we've already reached the zone. We're on the weak side of the triggers, and the 1 minute is odds favorable south. Does that make sense, Jen? It's a little bit different than the Renko read, but I think that lesson, understanding where you are in relationship to the triggers, and then even more so, let's put zones on this chart. There we go. You start to add those in. They can be sooner than Renko's, without a doubt. The zone holds. Once you get above the zone with the strong triggers, left side of the triggers, easy longs. A little bit of a transition, may have to manage. And then once you get back above them, it's longs all day long until you get back below them. So it's a slower read, I think is the best way to say it. And now they're pointing down, and now we're on the strong side of them, but we are directly into the zone. So this is where you want to make sure that your smaller, faster chart supports the trade. Rather than trading into the zones, make sure that you're trading from a zone with room back to have the targets. It's just a little different. That VWAP is hard to see when the zone is what I'm looking at. Right on. I love a VWAP, Andy. Those VWAPs create bounces without a doubt. I will use those for targets all day long. 2 at 92. 09. I'm not sure if you went long or short there. And then Ron with the pirate trade. Your time zone problem? I don't know what your time zone problem is. Ron, price reaches the mid-band. Oh, okay. Large triggers are a full bar away. Ron just says, I'm going to close the gap back to the large triggers. And Ron, you do a great job of it. Good to see you still have a pirate hat. Can't go long. This is an area that's likely to stop the market. Large triggers are a full bar away. Price is likely to close the gap, same way it did here. Ron says, I'm just going to ride that thing down. Nicely done. He was setting your alarm for 9:30 market open. You're in Central. Oh, I got you, Andy. Nice trade, Ron. All right, Miss Linda. Not quite sure. Not quite through one-to-ones, but strong momentum. I love it when you guys show me your butt. So, Linda, let me show you why you had a fighting chance. See those triggers that are below the area? Those strong triggers and 2 triggers below says it has the potential to break. You traded the potential to break. See how none of the triggers got through the area here? And look at the reaction. Pretty cool, right? In the heat of the moment, odds favorable momentum, no triggers through. Odds favorable momentum, 2 triggers through. That's the one with the potential to break. Takes you to the next area. Does that make sense, Linda? Nicely done. They are, Gary. And this is your 34.5 at 1027. At 1027. Woo, this market was screaming. So mine look like this. Yeah, just practice, Gary. I built a video yesterday. I'll put the link to it in here. So Miss Linda, this is a good example. And obviously it's not the same as yours. It's the same look on the large chart that you had. If you trade, there's your trend trade. That's the easy one. But if you trade into the fib, if you trade into the 1-to-1, you have to suffer the bounce. If you trade from the other side, with all that momentum, life is easy. I love, if you're not going to let it completely clear the large chart, getting beyond trouble on the small chart tends to pay pretty big dividends. Great trading. Just wanted to pop that one out there. There we go. And look at that. There's that odds favorable momentum, Miss Linda, right? That's that not a clear path, but. And look what happens. Backfires. Eventually, you lose enough money trading into areas that you get sick of it. So now we've got 3 divergences. Everything's above the fibs. 3 triggers through the divergence low. Separation between the small and large. Ladies and gentlemen, if I get a pullback to a mid band right inside of triggers, I feel pretty comfortable that my rules are met. Strong bottom, strong triggers, and 1, 2, 3 triggers through the divergence high. Entry rule says wait for a pullback, buy it just above an area inside of triggers. Does everybody see it? Separation between the small and large. 3 triggers through the divergence high. If I get a pullback, my entry rules say buy that pullback at an area, fib, midband, or yellow 1-to-1, inside of triggers. Momentum, path, and entry, my friends. The momentum is good. The path is only potential, so it's medium probability. It's not a clear path. And I have a well-defined entry. And if I get my entry, my stop goes 4 to 5 ticks below the triggers because that's where my advantage is gone. Guys, this is a medium probability trend trade. Why is it medium probability? Because my path isn't clear. I've got 2 of the 3. Let's see what it does. Oh, tapped and didn't fill. Is it worth it to pay an extra $1? 1, 2, 3, 4. Momentum, potential to break. I'm going to show you guys the challenge with this trade. Divergence is a loss of momentum. But with 3 triggers through, coming from 3 divergences, everything above support, wide triggers up, we're going to use the KISS plan that I gave in the room, guys. If I enter just above the area inside of triggers, Then my stop is 3 to 4 ticks below triggers. First target will be at $100. Second target will be $200. If I get a reversal bar, I will reduce my risk 2 ticks below the reversal bar that prints in the direction of my trade. This trade is in the KISS plan that's handed out each and every morning, guys. It doesn't guarantee a winner, but what it does do is it makes sure that I have a fighting chance based on advantages. Nothing for me to do until I either get a reversal bar or I get stopped out. Look at that large chart. That's a great look for momentum. There's my reversal bar. I now have $50 risk per contract. Nothing to do until either my first target is hit or they stop me out for $50 per contract. For those of you that are new in here, Christy, Naeem, Ali, Frank, George, Caleb, Jerry, this is what we talk about all the time. Being able to recognize momentum, separation between the small and large, being able to identify through counting triggers whether your path is clear, whether it's not, and then just finding a way to capitalize and having a set of rules that makes it consistent and repeatable. And understanding that I'll never be in control of the outcome. I'll never know whether this is going to win or lose, but this is a pattern that if I take the exact same look 100 times, I'm likely to win 70 to 80 of them, and I'm likely to lose 20 to 30. So consistency is key. Does that make sense to everybody? Does anyone have a question about what we're looking at? Whoop, there's our first target. KISS plan says go break even. Second target is at 200. Ladies and gentlemen, you have made $100 and you have absolutely nothing to lose. And this is just following a plan. Doing the same thing every time because I can prove that it wins more than it loses. Some people say, oh no, it's a divergence high. I have to exit my trade. Let's count advantages. I have strong triggers. I have an uptrend. I'm from a strong bottom. I'm above my small triggers now, which is even more of an advantage. Everything on every chart says this market is more likely to go up to my target than it is to just arbitrarily turn. Awesome. Miss Linda, thank you for being here. I'm having a great time talking through stuff with you. I hope you're finding it helpful. Enjoy your workshop. Are there any questions about what's happening on screen? I'm not telling anybody to take these trades. If it fits rules, I might do it on simulator to express that this is what it looks like when the rules are met. And when you know your plan, why will I enter? Well, because I had momentum, the potential to break in a very clearly defined entry that gives me low risk. Why will I exit? Well, because profit targets are reached or because I lose the advantages that get me into this trade. And guys, my second profit target has not been reached and I have not lost any advantages yet. So it's my obligation per my plan to just stay in this trade a little bit longer, to let it marinate, to do what I do. Some of you might say, well, Mark, you could reduce risk. You could get close, right? If I got close here, I got stopped out. If you want to cover commissions, give it a tick. I'm going to keep it break even. That's what my plan says. I have an awful lot of faith in odds favorable momentum. I have a lot of faith in strong triggers. And when there's nothing in the way on that large chart to create a bounce, guys, I firmly believe it's more likely to hit that target than it is to come back and hit my stop. Now, one thing about Fibonacci is Fibonacci areas are areas. Sometimes you can put a stop a tick below just in case they stop short. Sometimes you can put a stop 2 tick or a target 2 ticks below and say, you know what, this is an area based on 20,000 calculations. I'll give it a tick or two grace on either side. And when you're that close to your target, guys, well, there we go. We made it anyway. That's when it's okay to tighten up a little bit, to say, well, if I get a close on the wrong side of the triggers. But ladies and gentlemen, that's your trade. This is what we do all day, every day, as we talk about how do I get to the point where I can recognize advantages. Is anybody going to show me this one in the room? I hope so. That was easy money, Pete. That was easy money. Guys, this is the path of least resistance. Your trade got out at the exact same time mine did? Awesome, Victor. Because it's not you or I making decisions. It's the market making decisions. We're trading the patterns. The market gives and the market takes, guys, and this is the perfect look for the market to give. Joel, odds favorable. Look at the entry. Like a sniper, my friend. A little late. Maybe a little late. But Joel's rules say wait for the reversal bar. So Joel, when your large chart looks like this, that's when buying at the area, it's less risk, it's higher profits. Does that make sense? That's that high probability trend trade, man. That's the absolute best of the best. That's the one where because you're using that refinement process now, you don't have to wait for confirmation. You've got all the good stuff. But if you do, that's totally cool. Did it make it to 32? It did make it to 32, didn't it? Ooh, not yet. Ooh, they missed you by a tick. So, Joel, we've got different fibs. You don't have anything till 43. 9:54, 10:54. And Joel, this is a product. You're in Central Time Zone on your charts, which means you and I have different midnights, which means that our software is running different calculations. So we're not lining up on Fibonacci because I have a whole hour's more movement that go into my calculations than you do because we're in different time zones. So guys, when you see the discrepancies, the software isn't broken. It's just a calculator. All it can do is run calculations. Great trade, Joel. Nicely done. 2 triggers through, 2 triggers below, strong triggers here, not strong triggers here. For you guys that like to just jump in, there's your clearing of the area. You guys want to test the theory. Will it keep going up until it closes on the wrong side? Guys, this is not a trade. This is not anything that fits a rule. We're going to test the idea that as long as price is left at these small triggers, it's going to keep going up. So every time it goes up, I'm going to chase a reversal bar marker. And just for grins, even with Fibonacci in the way, just for grins, we're going to see how that works out. If I were holding this trade and I said I'm going to let the next one go until it can't go anymore, we're going to see how long that is. All right, there's a fib. A fib can create a bounce. I'm going to force it. This is my runner. I'm going to force it to give me a close on the other side of these small triggers. If it doesn't, guess what? It's going to keep going up. And if it does, great exit. Does that make sense, everybody? Now, this isn't a real entry. This is a will the market really keep going up until I get a close on the other side of the triggers. So for you guys that are taking momentum trades, for you guys that are trying to hold to get a little more out of these trades, maybe it's your last contract and you're like, man, it's momentum. We're coming from a strong bottom. I want to see if this fib breaks. Using a close on the other side of the triggers is a great way to give it that opportunity without too much risk left on the trade. You can see the market virtually stops at that fib. Buyers and sellers are making decisions. We're going to find out in just a second if the buyers are going to continue with their momentum or if the sellers have a little something for them. But this is a great example of why I like to get paid at Fibonacci, because it can create a reaction. It can create a bounce. can create a spike. It can ruin my good time. And if I get a close on the wrong side of these triggers, the up movement is over, at least momentarily. But instead of getting paid at 23, that's another $100 in the bank. Do you guys see that? That's kind of the lesson that I wanted to get here. If I were going to hold this contract until this happens, guys, that's an extra $100 in this trade. Does that make sense? You guys working on management? And if it goes up further, it's even more. Waiting on that retracement bar in the 5-1 to come in on a buy trade. Victor, please don't call your shots, brother. Show me a picture. Show me your rules open. No, Jen, this is not a trade, 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 not rules met, absolutely nothing met. Directly into Fibonacci resistance, Jen. This is, we're going to see if the market actually goes up if I don't get a close on the other side of the trigger. So what we're doing is we're saying, if you didn't want to exit, if you didn't want to exit at resistance, if you wanted to see if it would break, you can use this concept of the close on the wrong side of the triggers to hold that last contract for a bigger move. So instead of getting out at the fib, if I'm waiting for that close, Jen, my runner's still running. No, you're okay. And you're not the trouble student today, Victor. But it's directly into a termination, right, Pete? If you got paid here, totally cool. But if you guys took the right trade, made money on the way up, and now this is just your runner. This is my, you know what? I'm going to hold this one until it just dies. I'm going to hold until that momentum goes away. This is a management lesson. This is not a trade entry. This doesn't fit any rules. It's okay to get paid at a fib. But if you were in this trade and you had already made $400 or $500 and you're looking to let that last one run until it runs out of steam, that's the idea on chasing the reversal bar marker. And we can say with no triggers through, it's more likely to fail than it is to win. But every now and then they throw you a bone. Every now and then it defies logic. Every now and then it's that 20% where it doesn't break. And guys, there you go. Once you get that close on the wrong side of the triggers. So Victor, I ask you, you said you're waiting for a retracement. I don't know what your charts look like. My chart says absolutely no more longs. Price reached Fibonacci resistance. I don't have any triggers through it. Hell, I don't even have areas inside of triggers for entry. So if I'm looking at this chart, guys, and I'm going through those three magical things, I have momentum, I don't have a clear path, and I don't have an entry. I've got 1 out of 3, and it's low probability. But you know what? I don't care because I made my money here. And all I have to do is do that twice a day, guys. And my life is easy. And I don't go clock in at work anymore. And I play golf on Tuesdays. Or Mondays and Tuesdays, and Wednesdays, and Thursdays, and Fridays, and Saturdays, and Sundays. And that's my life because I'm following a plan. The zone worked, didn't it? I just never said anything but down. Jen, the easy money is stress-free. I show this picture every day. And I can't stress it enough. This is where life is easy. This is where life is easy. Well, Victor, remember, I've got 6 years on you. 6 years reading these indicators on you. If you, every time you take a trade, especially as a brand new user, If every time you take a trade, you out loud say in whatever voice gets your attention, do I have momentum? Is there anything in my way? Let me find an entry. If you go through this process every time, guys, it keeps you out of a lot of nonsense. Got to go, not playing tomorrow. See you Friday. Sounds good. Enjoy your day off tomorrow, Ron. Appreciate you being in here. I love that it was a pirate trade. Good stuff. Shoot them straight. Hit them straight. So Victor, the easiest way to get to where you want to be, and if you're new in my room, guys, I'm telling you the same thing that I tell people that have been with me for years. When you have these first two, life gets easy. And that's what it looks like, guys. This is what I say every day is the easy money. Let me take these off of here. We're going to make a picture. So this one is the training that I give every day. The easiest trades you'll ever take are trading away from Fibonacci with momentum, trading to Fibonacci. The easiest trades you'll ever take are trading away from Fibonacci with momentum, trading to Fibonacci. Do you guys see it? This picture is months old. This happened just a moment ago live in class. How it looked in TV, Pete? Coming from the zone, strong side of the triggers, breaks the zone, pulls back to the zone. Large triggers are still up. You could have gotten in here. You could have gotten in with the close above, either one. Easy money, Pete. Nice job, dude. Great trade. It's the same thing every day. And now we're getting above the zones. There's your break above. There's your pull back. Getting in on the good side of things because you don't have odds favorable momentum yet. I love it. How are we doing today? Man, look at the bounce that termination created. Pretty awesome, right? This is why we get paid at Fibs. So easy to get paid at Fibonacci areas and just wait for the next trade. Steve, back of the bar clears. Odds favorable momentum. Get in below trouble. Get out at trouble. Nicely done, man. Exiting second contract so close to the mid-band. Missed one tick. 98, 98. So you're not showing synthetics over here. Nothing wrong with taking your exit, hitting a fib, Steve. And then if you want to take that trend trade, rock it out. So that's that decision-making point. Nicely done. Great trade. Momentum and path. Momentum trade. When the momentum trade fails, turns into the trend trade. And sure enough, the trend trade continues down. Just outstanding chart read, Steve. Pete jumping in. When the momentum trade fails, it turns into the trend trade. And you get it all back. Nicely done. Guys, there's a reason that Pete's entry is 6804. I was one tick higher. Pete beat me on that one. It's the exact same trade. Pete and I are not in cahoots. We weren't talking privately, saying, hey, here's your entry, here's your exits. It's because that's the rules, that's the path, that's the plan. All right, Russ. Strong triggers. You get in on the way down, and you get out at trouble. Held on this time, trusting indicators. Great trade. Russ, you have turned a corner, my friend. You have turned a corner. Great job, dude. Awesome work. Love celebrating victories. So how are we doing in here? How are we feeling? There's a lot of you that are quiet, guys. Is there anything I can do for you? Andy, not the best large read from the small chart, but this mid-band did hold. The dotted lines are a volume gap or a price gap. So Andy, large chart says down. You're on the strong side of the triggers for down trade. Your small chart says down, fast triggers are down. You're outside of the outer band. Andy, I'm glad you got your target. That's a lot of fighting. It's a lot of fighting. I'm glad it worked out. Taking long trades against triggers from outside of the outer band is going to work less often than it doesn't, especially when you're fighting momentum on the large chart. I'm thankful that it worked out for you. It's aggressive. But so now let's celebrate the other side, right? Well, practice like you want to play, Andy. The zone is reached. You hit a zone here, and you waited to get on the good side of the triggers, right? You waited to get on the good side of the fast triggers. So as long as you know you're fighting here, great patience, and then it runs right up to trouble. So because it's an educational room, Andy, I've got to talk about what I see on both sides of the coin, right? First, I have to say there's a lot of fighting. And then I have to say, because of the fight, great patience on not just hoping that it holds, getting back up to the good side of that smaller, faster chart to have a little bit of advantage. Nicely done. Nicely done. And Andy, that's kind of why. It's hard to fight these triggers. Troy, there wasn't one yesterday because we had so many problems with the audio that I didn't want to put a YouTube video up that was 10 minutes of me fighting Discord audio. Was yesterday the day we did the lesson on management? Do you want to go through it again today? I'd be happy to. I would be more than happy to go through it again. I do have YouTube running now, and there will be a recording of this if you want to have it for... Maybe, Andy. I'm not sure. Troy, you asked a question in the room, brother. This is your room, man. It's your room. They can object all they want. We're going to do the lesson. And remember that everything that I'm about to talk about regarding management plan is right here in the trade tracking sheet. So I'm going to recreate the lesson the same way we did it yesterday. Understanding that every time you enter a trade, let me go to the KISS plan real quick. Every time you enter a trade, ladies and gentlemen, there's two things that you should know. You should know why you'll enter. And the easy answer is I'm entering because my rules are met. Because your rules should be proven to win more than they lose. Your rules should revolve around advantages, having an edge, guys. And this is one of the reasons why I encourage you guys to name your trades. So what kind of trade am I taking? If I'm taking, and for the sake of this, we're taking what's called a high probability trend trade. And the high probability trend trade, I know, can come from a strong top or bottom, but it's not mandatory. I know it's going to have strong triggers. I know it's going to have no termination conditions. And I know that I'm going to have a well-defined entry. These are the advantages that get me into the trade as outlined in my checklist. So I know exactly what's going to get me in. And why will I exit? Well, there's two reasons. The best reason, my favorite reason, is because I hit my profit targets. Profit targets can be a monetary number. Profit targets can be reach Fibonacci resistance, right? So Troy, this one right here follows the KISS plan beautifully. And this is the management idea. And this is the very mechanical plan that we're going to talk about. And it's 100% if then. So if, whoops, that's the wrong one. If I enter a trade because of advantages, I'll exit either because profit targets are reached or because the advantages that got me into the trade have disappeared. And that was what we talked about when we were riding the momentum, right? And we said, until I get a reversal bar on the wrong side of the triggers, I'll hold this trade. Until I get a close on the wrong side. That would be the advantage of momentum going away. So what we're going to do is we're going to define entry, and great entries create manageable trades. This is the entry for the high probability trend trade. The management is exclusive to the high probability trend trade. So Troy, if you are taking a trade that is not this trade, you're going to have a different management approach. You can create a checklist and if-then scenario. So for example, if it's a 50-50 trade, divergence may be an exit reason. Hitting the area that isn't broken yet may be an exit reason. But we're going to focus on the best of the best. And we're going to talk about management. 2 contracts, one to get paid, one to trust the large chart. And it's going to be very if-then. So if my entry is at an area, 2 ticks below an area inside of favorable large triggers, well, then my initial stop is 4 to 5 ticks beyond the triggers, because triggers define where that retracement is most likely to go. Areas inside of the triggers define where it's most likely to bounce. And guys, this is where my advantage of entry is no longer in play, which means that's an exit condition. I never know if this is going to get hit, but what I do know is that with odds favorable momentum on the large chart, with a clear path on the large chart, Troy, they're going to have to come get me. I am not going to throw myself at their feet by putting a stop at an area inside of triggers. I'm not going to put my stop inside of the retracement zone. They're going to have to work hard and come get me if they want me. The cool thing is you're going to know where your risk belongs before you ever take the trade, because your rules tell you where the market should not go. So as we were waiting for this trade, Troy, do you see how before we ever got entry, I knew exactly where my stop was going to be? Pretty cool, right? And I can decide whether or not I accept that risk. In the KISS plan, your targets are at $100 and $200. And this is because so many of us as brand new users want to make all the money in the first trade. Instead of saying, you know what, let me get some in the bank. Let me take base hits because they produce home runs if you get enough of them. So guys, this KISS plan is designed to help you focus on getting paid. So if I enter at the area inside of favorable large triggers, then my stop is 4 to 5 ticks beyond the triggers. And there's nothing to do. Sit on your hands. If I don't get stopped out, it means that I get a reversal bar. We call this a confirmation bar, guys. A confirmation bar is confirming that now the market is going down with odds favorable momentum. The market is going down from the area where it's supposed to go down. The market's going down and there's nothing in the way to create a bounce on the large chart. This is confirming that all the good stuff is happening. So I'm going to redefine where the market should not go, and my first stop movement will be 2 ticks above that reversal bar or below it for a long. Still doesn't guarantee a winner, but what it does is it dropped my risk from $150 per contract down to $30 per contract because of my great entry. Nothing to do at this point. Guys, if you're working on management and you're learning to trust your indicators, let your management plan play out. Don't move your stops and targets. Just wait and see what happens. Take some notes, post in the room. If they don't stop you out, it means they went to your first target, guys. And if price reaches your first target, one of your two contracts is automatically removed. Those funds go into your account. You have been paid. You are successful. Your palms are starting to not be so sweaty. Your pulse starts to go down. Your breathing goes back to normal. And with one contract remaining, you're going to move your stop to break even in the KISS plan. Notice that there is nothing on this screen that says that's where the market should not go. It's not. Guys, your stop is now at an area inside of triggers with the advantages on the large chart. That's an entry. But what we're doing is we're learning to trust and believe that with those large chart advantages, it's more likely to go down than it is to go up. And having nothing at risk makes it easier for you to sit through that. If they don't stop you out break even, the KISS plan says your second target is at $200. And that's a $300 trade. And what you have is 5 minutes of your life, 4 minutes of your life. You called your shot and you moved your stops logically, pragmatically, emotionless to produce a $300 winner. And Troy, that is on the spreadsheet that I give. But if we go back to the trade that we took in crude oil, large chart set up, momentum, everything was good. Pull back to the area inside of triggers. We were in at 68.05. First profits were taken at 68.15. Second profits were taken 2 ticks below the fib because that's smart management. But if you were holding, it hit your 25 target. The exact same concept that we talk about in that KISS plan is exactly how it played out for this trade. Now, some of you are going to say, but man, there was so much more in it. Troy, that's where you can use the idea when you start holding for bigger moves. If you choose not to get paid at Fibonacci, you can get out with that loss of momentum in the move, and it produces just a little bit bigger results. So guys, that's the very emotionless kind of plan for management. There's a lot of nervousness that goes into trading. Directly into all the fibs, guys. No reason to take that long trade. Is that helpful, Troy? I think 90% of you guys, oh, my pleasure. Troy, this is my favorite thing in the world. 90% of you will nail these entries. Will nail these entries. I was the king, and Troy, I'm going to tell you a secret, and I hope Troy's okay. I know there's a V in front of it, but I would take this trade as a brand new user, and because I was so scared of losing, I would move my stop break even the second it started up, and they would come out and stop me out. And I was the king, Troy, I would take 20 trades in a day. I would take 20 ticks in profit, and I'd be down $100 in commissions because I was terrified to let them run. And having this little mechanical approach, what it does is it really gives you the opportunity to just sit while you're on simulator, to learn to trust. And I mean, there it is right there. Strong triggers, it just keeps going. That's where the advantage lies. Good stuff. Thank you for asking that. I don't think you guys realize it, but it's your questions that create such an amazing classroom. Price reaches Fibonacci support, pulls all the way back to the triggers, retests support in the divergence low, and everything is rolling up. Some of you are like, oh, he's going to take that picture again. I talk about the market moves in patterns. The market does the same thing every day. The market has a memory. I'm going to go to the trading guide real quick. And I'm going to go to termination conditions. And I want you guys to see this picture. Come on, pictures. There it is. org. Let me make that bigger. All right, so I want you guys to see this. And it's reversed. And this first picture on the left, guys, is crude oil in 2021. That's when this pattern happened. This one is the S&P at 11:20 a.m. Price reaches Fibonacci resistance. There's a loss of momentum. I see that through the divergence. Price reaches Fibonacci support. There's a loss of momentum. I see it through the divergence. It retraces all the way down to a fib and a midband. It retraces all the way back up past the fib to the midband. The large triggers don't follow. The large triggers don't follow. It closes that gap and retests the area, closes the gap, retests the area, and then it continues down, and then it continues up. It floors me when I realize that the market does the same thing every day, that the market repeats these patterns every day. Once I learn how to identify that pattern, I have an edge. And that's exactly what we did here. We said, with this look, that's my entry. Isn't that cool, Victor? This was 2021 NinjaTrader, is what that says. Crude was trading in the 50s. Did the same darn thing in the S&P. And this is why I stress to you guys, don't worry about the money. Focus on the execution of the method. Focus on identifying a couple advantages and looking for a way to capitalize. There's our termination that reverses the market. There's smalls above the large, 3 triggers through the area. If I get a pullback, I can define the area inside of triggers. Does that make sense? Termination reverses the market, smalls above the large, 3 triggers through the fib. If I get a pullback, this Fibonacci support or this green midband, this is where the market is most likely to bounce and continue with that momentum. My entry is a tick or two above it. If this happens, then I'll look for this. The only thing missing now is the pullback, but I've already got my shot called. I already know exactly what needs to happen, exactly where I need it to happen. I just need it to happen before it hits that red line. And now I've got 4 triggers through support. I have odds favorable momentum, and I have a clear path, guys. Do you guys see it? And now my highest point of support is a yellow 1-to-1 inside of these triggers. If I get my entry, my stop goes where the market should not. The only thing I need is an entry, guys. I need that fight. I need that retracement. But I've known about it forever. Hey, Russ, I believe that's your entry, my friend. Didn't look great over here, though. Is everybody with me? I have strong triggers. I'm trading away from Fibonacci. I have not reached Fibonacci, which means that I have a clear path. I have all the momentum that I need. All I need is a pullback to an area inside of triggers. Ladies and gentlemen, this is where the market is most likely to bounce if that retracement happens. And my stop, we'll use this little dot, will go 4 to 5 ticks below. I already know where my risk is. I know where my entry is. Hell, I even know where my targets are. Are there any questions about what we're looking at? Jerry PGL, this is what we're looking for every day. This is what we talk about every day. Who else is in here that's new with me? This stuff should excite you guys. It's like being able to predict what the market's going to do. Doesn't guarantee a win, but this is a pattern that I can prove wins more than it loses. This is a pattern that I can go back and study and say without question, when I have momentum and a clear path, ladies and gentlemen, it's more likely to bounce from the area inside of triggers and continue in the direction of that path. We'll see if we get it. We've already had one high probability trend trade today. Worked out pretty nice. Small crowds fighting, guys. They're trying. They're trying to get us to our entry. Right now, we're rooting for the sellers to have a thorn in their side and want to pick a fight, but we've pinpointed right where their fight is most likely to die. Any questions? Does it make sense? Guys, I'm not telling you to take a trade. I don't tell you to take trades. This is an educational room for educational purposes. I'm identifying rules being met, and I'm using a beautiful visual of where the entry would be taken if you were a rules-following high-probability trend trader. Does it guarantee an entry? No. Does it guarantee a win? No. But this is my pattern. And there's nothing for me to do if I don't get an entry. If I don't get it, guess what? It's not my money. All right. I love it. This is exciting. And Troy, if we get our entry, we're going to manage it per the KISS plan. We'll take our entry a tick or two above Fibonacci support. Oh, there we go. Our stop will go 1, 2, 3, 4 ticks below the triggers, where the market should not go. First target's at 100. Second target's at 200. The only thing we need now is a reversal bar. A reversal bar says put your stop 2 ticks behind it. But guess what, guys? We're going to get profits before we get a reversal bar if this market goes up. There's our $100. We're now break even. I have absolutely nothing to lose. Second target is $200. With all of this momentum and a clear path, I like the chances of it getting hit, and I have absolutely no risk on this trade as we go to it. Any questions? All we're doing is we're following that KISS plan, guys. When you grow with the software a little bit, you might say, with all this momentum and a clear path, I'll hold for Fibonacci. But until you have that confidence, until you have that comfort level, learn how to get paid, guys. Learn how to get money in the bank. Learn how to do it consistently. And we're just in a holding pattern. It either goes up or it goes down. What's the large chart say? This is where people get nervous. My large chart says up, overwhelming up. My large chart says there's nothing in the way. My small chart says we bounced right where we were most likely to bounce. I'm on the good side of the small triggers. Guys, you can't talk me into doing anything other than just watching. I make it seem so easy. Morgan, it's because I don't let it be difficult. I know exactly what it's going to take to get me in. I know exactly when I'll move my stops. I know exactly where my targets are. And I'm very content doing absolutely nothing until there's something to do. How do you get to that point? Practice, repetition. And right now we're just doing the KISS plan, right? What if it comes back and hits me break even? My break even is at an area inside of favorable large triggers. Technically, my stop is at an entry, which is a cardinal sin. But because we're just learning to read indicators, because we're just learning to trust indicators, we're just going to let it ride out, guys. It either goes or it doesn't. It either stops or it doesn't. It either hits our stop or it doesn't. I'm not in control of it. I'm going to sit here. Man, that was close, wasn't it? Whew. Yeah. You got to learn to squash that gut feeling. My guts are liars. My guts told me to exit because everything was going wrong. My indicators tell me I'm more likely to go up than down. And Troy, if you choose to, that's great. No worries. Do your thing, man. My plan said don't touch it. My rules said don't touch it. Be willing to make $100 on a trade every now and then. Did you notice that it came back a tick above the midband inside of favorable large triggers, which is exactly my entry rules, and my stop's kind of behind it. Troy, there would be nothing wrong with getting paid, and I can't stress that enough. Eventually, you learn how to get paid more. Eventually, you learn how to get paid bigger. Eventually, you learn how to hold for bigger moves. Guys, that's just repetition. If you look at the spreadsheet that I gave you, in the management section, guys, when do I hold for bigger moves? When I have odds favorable momentum and a clear path. Get paid on the way down. But man, this says it's more likely to hit that fib than it is to just turn around and go up. And I remember that trade, and it did hit that fib. And somewhere in that spreadsheet is the final picture of that. Still holding, guys. If you're nervous, look at your large chart. What does the large chart say? Do I have momentum? Give me a Y in the room if you see it, please. Do I have a clear path? Can we say that this market's more likely to go up than down? And then watch this, Troy. This is why we use the small chart for entry. Nothing is blinked on your large chart. These are just fluctuations that happen inside of this one bar with odds favorable momentum and a clear path. This is why going break even on the second contract creates bravery for you guys. Kind of neat when you see them next to each other, right? Large chart never changed. Small chart did a dance. Doesn't mean they're not going to come get me, but they haven't gotten me yet. They're going to make us sit and wait a little bit, aren't they? So close, so many times. It's up, it's down. It's good, it's bad. I don't know. What do my rules say? When you trust your rules, guys, trading becomes stress-free. All right, they got me. I only made $100 on that trade. I've got odds favorable momentum. I've got a clear path. I can still put a stop where the market doesn't go, right? I like to take a trade, call it a trade. We'll see what happens. If I take a second entry on a trend trade that fails like that, very often I'll wait for a reversal bar. But because the rules are still met, we're just going to do it, guys, and see what happens. This is why when you grow a little bit, stops at entries aren't always the best, because your break even is right at a midband, right inside of triggers. And really with this look, that's where the market is most likely to bounce and go back up. We'll see if it does. We've already made $100. We're pretty much playing with house money at this point. And now we're just in a holding pattern. We'll see what Gary did. Gary, how do I fix this and return to Nexgen view? Gary, look up. John Novak answered your question and gave you links to everything, brother. Okay. That's why I like to wait for a confirmation bar on the second one. Isn't that awesome? You guys can make money on trades that fail with a good entry. Remember, it's FOMC day today, guys. There's going to be a little bit of crazy here and there. But that's pretty awesome. It's fun to watch. So we had one that went the distance, and we had one that we only made $100 on. Not so bad. NASDAQ, weakness, no reason to take an entry from the wrong side of the triggers. Price reaches resistance. Large triggers are a full bar away. Even with momentum, absolutely no short trades. No long trades. Sit on your hands. 4 triggers above the fibs. Strong trending market. Buy the midband until it stops working. And guys, they wanted to go up. Damn sellers showed up. So now we have a termination condition. Now we've got strong small triggers. There's a mid band. If we get a little pop back right here, guys, this is what we call a momentum style entry. When the trend trade fails, it's not giving it though, so we're good. It is 11:40 in the AM. Let's do a trading view check, guys, and see what they're saying. The zone held, and now we're back to the weak side of those triggers down, which means that if I can find a little bit of agreement on my 1 minute chart, right now I don't have it, strong triggers down, we can look for longs straight from the zone on the good side. The first trade would have been this HVA trade, and it didn't produce. They didn't give you the entry. But now we're on the weak side of the triggers. We are at a zone. Strong triggers down. This is tough. You could say, let's try to go short and see if the trend continues. But you've reached your target. You don't have the momentum. You're on the wrong side of the fast triggers. Maybe just a little bit of patience. There's your zone. Did it give the HVA trade? It set it up. Didn't give the entry. Those sons of guns. Weak side of the triggers, but into a zone. Small triggers are up. Not a good looking short. You're just holding. Crude oil directly into a zone. Triggers roll. There's your HVA trade, but it didn't have anywhere to go, right into that zone again. You'll get to the point to where you read these indicators quickly. And you'll realize as well that you're not in charge. And I'm pretty sure NinjaTrader is about to crash. Yep, my NinjaTrader is frozen. There it goes. There's the crash. One of the reasons we built the funding company around TradingView. Never had TradingView crash. Let me give you something to look at. Never had TradingView crash. Not saying it can't happen, but it sure never happened to me. Love the look, but hate the crash. The look is familiar, Andy, and I think that's what a lot of it is the look is familiar, right? When you do something long enough, it just becomes second nature. It becomes easy. TradingView for me, Andy, has become second nature. It's become easy. I've got strong triggers up, but I'm directly into trouble. I'm not going to fight my small chart. If it sets up a trend trade or something, maybe I can take an opportunity with the strong triggers to retest the zone. But I'm not fighting triggers on the way down. And what happens is you get to this point to where you start saying things like, all right, weak side of the triggers, but the triggers are down. The only way I'm going to look for a long trade from the zone is if I get a little agreement. If I don't get the agreement, I'll sit on my hands. So we're in a transition. And it just all goes back to chart reading, guys. I've done my study. I have taken, oh goodness gracious, this year alone, I'm over 5,000 pictures. Poor John Novak has seen at least 3,000 of them. Hey, John, this is what I see. What's it mean, right? Hey, John, this is what I'm looking at. Do you see something that I don't see? Hey, John, this is a pattern that I'm working at. Have you seen this pattern? Guys, I use John Novak as a coach and a mentor because he has experience and he sees it and he talks about it and he walks me through it. This is what you're looking at and this is it. Hey, John. Oh, now I know how to drive him crazy. But John is my coach. John is my mentor, guys. You have the ability to use me as a coach. We looked at this yesterday. I love the AI answer on this. Guys, professional athletes, and we're just going to use them. Why do they use coaches? Because it helps them find success, guys. It's an objective analysis. When you show me your charts, I'm not worried about your wins and losses. I'm worried about your chart reads. Are you doing something that's repeatable? Can we find a way to make it happen over and over? Guys, and when you show me your charts, it's personalized. I take those general lessons and I apply them to where you're at in your chart reads. Accountability, I'm there. I hope I'm motivating. Um, Mental and emotional support, I'm a warm, fuzzy kind of guy, right? Access to expertise and resources. That's me, guys. I am expertise and I am resources. And it keeps you at the top of your game because when I'm in the middle of a trade, guys, I'm thinking about nothing but the moment. Am I going to get paid? Is it going to go to where I want it to go? And if I jump into the market right here, above the zone with strong triggers, and no matter what happens, right? No matter what happens next, there is going to be a lesson. So I have to come back to it and I say, okay, why did I do what I did? Why did I enter here? What did I see? And if it's good, I'm going to repeat it. And if I got lucky, I probably want to avoid it. And guys, that's just all trading is. It's doing the same thing every day. I'm glad he hired Mark too, Andy. My brother saved my bacon. I am eternally grateful. I had just had my second spine fusion. I couldn't go back to my career. I had no idea what I was going to do in life. And COVID had hit, and John said, hey, you're pretty good at talking to people. That bartender in you works. Why don't you learn these indicators? And why don't you teach them to my clients? And I'm so thankful that he did because I really do love what I do every day. Every day. What else can we talk about, my friends? Ninja Trader crashed again. If Ninja Trader crashes twice in a row, guys, very often there might be something glitchy in there. Might have to rebuild workspaces, but what I'll do first is I'll go to Ninja Trader and I'll get rid of my cache and tick. So if there's corrupt data, we can get rid of it. I'll get rid of all of my temporary folders and I'll go to my workspaces and I'll delete the recovery workspace. And a lot of times that'll kind of cure what ails you. If it doesn't, it means that there may be something corrupt in the workspace. If you start getting those often crashes, and if that's the case, I'll just rebuild workspaces.